Dear students, welcome to my channel. I am Dr. Venkateswarlu, Assistant Professor in Accounts and Finance. In this video, I am going to dealing with how to prepare ledger. After successful preparation of journal entries, the next step we have to prepare ledger. Ledger posting is the process of classifying the accounts each and every account. So here we take an example. Mr. Ram started business with cash rupees 5 lakhs on 1st June 2003. For this transaction, we have to write journal. So here Mr. Ram is the personal account, cash is the real account. So here one personal account and one real account is involved. Then, so previously we discussed about journal entries. So according to the personal account, debit the receiver and the credit the giver. So here Mr. Ram invested money in the business, so he is the giver. So Mr. Ram account shows credit. Next, coming to cash. Cash is the real account. So under real account, the formula is debit what comes in, credit what goes out. Here, whenever Ram invested, the cash came into the business. So now the entry like cash account data to Ram's capital account. So here date, ledger folio, debit and credit. So now the next step is ledger. Let's see the ledger posting. So in the T-shaped table we have to prepare. Coming to left side debit side, right side credit, left side debit values, right side credit values. So ledger, the first element cash account. So in the cash account, so here cash shows a debit balance. Now we have to post the balance in the debit side. So now in cash account, we have to use the opposite word Ram's capital. So now to Ram's capital account. So 5 lakhs. That is the entry. Now the second element, Ram's capital account. So again, we have to open Ram's capital account. Here Ram's capital account shows Ram capital accounts shows in the credit side. Now Ram's capital account by cash. We have to use the opposite word here, Ram's capital account opposite cash, because of Ram's invested the capital in the form of cash. That's why we use the word by cash account. So 5 lakhs rupees. This 5 lakhs rupees we have to post it here credit side. So for this first transaction, Mr. Ram started business with cash 5 lakhs. For this transaction, here we have see the journal cash account data to Ram's capital. Now posted into ledger. So in cash account the value shows in the debit side to Ram's capital. Now Ram's capital account shows the credit value. So by cash. So let's see the one more example. Mr. Ramu has the following transaction in the month of July. Record them into the journal and show posting in the ledger and balance the accounts. See here, Ramu started business with a capital of 75,000. So here Mr. Ramu is the personal account, cash is the real account. So cash account data to capital account. Now cash shows at in the cash account, we have to open the cash account. Here cash account. The first value shows on fund 110/2005 to capital account 75,000. Here like cash account data to capital account. Cash is the debit side. We use the term capital account 75,000 1st July. Now in the cash account, to capital account 75,000. We use the word capital account. Now the second element capital. So in the capital account, we have to open the capital account. We use the word cash. Let's see the capital account. We use the word buy cash. So 75,000. Next, third one. Second one, purchased goods from Manu on credit 25,000. So here purchase goods. Goods is the real account. Manu is a personal account. Here Manu giver. Goods is the real account. So under real account, debit what comes in, credit what goes out. So here goods account or purchase account data to Manu. According to personal account, Manu is the giver. Debit the receiver and credit the giver. Manu is the credit. Purchase of goods is the debit. So that is the entry. Let's see the journal entry. Goods are stock account data to Manu. Manu is personal account, under personal account, credit the giver. So under real account, debit what comes into the firm. 25,000, 25,000. For this transaction, see the ledger, goods and Manu account. Now goods account. So here, goods account debit side, we use the word Manu account to Manu, 25,000. In Manu account, this is the goods or stock account. In Manu account, buy goods or stock 25,000. So in Manu account, we want to use the Manu's name. So we'll use the opposite word, goods or stock account. In the goods or stock account, we want to use the goods or stock account directly. We use the word opposite word to Manu account. Next, see the sold goods to Sonu, 20,000. Sold goods to Sonu. Here, sold goods is the real account. Sonu is the personal account. Here, cash is the real account. So here, the transaction happens through cash. We don't need to remember Sonu account, Sonu's name. Sold goods to Sonu, 20,000. So now, according to the real account, whenever we sell something, it is debit to what comes in, credit what goes out. So here, goods is the credit side. The entry is like Sonu account data to goods or stock. So goods are stock in the credit side. Sonu is the person, debit the receiver. Sonu is the receiver. Stock is left from our company whenever we sold, being the value of stock sold to Mr. Sonu at bill. Now in the ledger account, Sonu and goods, let's see. In goods accounts, we are using the opposite word by Sonu. Sonu account 20,000. In Sonu account, two goods are stock account 20,000. Opposite word we are using. Let's see the fourth transaction. Sold goods to Tanu for cash 16,000. Sold goods to Tanu for cash. Here transaction happens through cash. Here we no need to record Tanu's name. So sold goods. Goods is the real account, cash is the real account. Here in this transaction, according to the real account, debit what comes in, credit what goes out. So goods are going out, cash is income, in what comes into the company. So now cash account data to goods account. Let's see, cash account data to goods are stock account 16,000, 16,000, being the value of stock sold to Mr. Tanu for cash. So here we no need to use the word Tanu's name, even though he might be the receiver. So through sold or sale of goods, we no need to remember Tanu's name because of the transaction happens through cash. So cash account data to goods or stock account. In this way, so we have to prepare, first we have to prepare the journal entries, then we have to post a ledger accounts. So like goods or stock, Manu, Sono. So how many accounts are involved? Each and every account we have to open. So furniture account, Geno account, Jani account, drawings account, missionary account. See, whatever the effect, whatever the transaction written in journal entries, simultaneously we have posted to ledger account. So whichever is in the debit side, we posted in the debit side, whichever is credit side, in ledger account, particular ledger account, we have to post it credit side. See the last transaction, bought machinery for 18,000, bought machinery, bought and purchase machinery for 18,000. So machine purchase, machine is the real account, 18,000 cash is the real account. So here purchase or bought, if bought something, cash is outgoing, machinery will coming in. So here machinery account data to cash. Machinery account data to cash, being the amount paid for machinery purchased to MS. So here coming to ledger account, in machinery account we use the word to cash, opposite word to cash, debit side 18,000. Now with this account having no other transaction, let close the account. So 18,000, transfer this 18,000 to credit side 18,000. So credit balance or nothing, then we are using by balance carried down with the end value. So in this way, we have to prepare each and every account, machinery account, drawing account, cash account, Sono account, goods account. How many accounts are involved? We have to show each and every account separately and posted into debit and credit side. As it is, if for example, goods are stock in the debit side, cash in credit side. So on 20th July, cash shows 13,500. See, 20th, buy goods are stock 13,500. Let's see, 13,500 goods are stock debit side to cash. Actually, cash is in credit side. That's why we use debit word. Goods are stock. In cash account, we won't use the name cash. That's why on 20th, we use the opposite word because of it is cash account. Buy goods or stock account, value 13,500. Okay. Okay, thank you.